Hi, Tom and Wayne. We're back on More with Property Tax Appeals. We've been talking about using the appraiser, calling the assessor, do you need an attorney? And I guess the big question pops up, how complicated is this? Can I do it myself? And I think with Wayne's help, you can.
Well, I think, Tom, you'd have trouble doing it yourself. But most people would really have no problem at all with just a few little guidance and a few tips. But seriously, Tom, the process of working through your assessment is actually very clearly and succinctly outlined at all assessor points around the state, around whichever state you're in. They have the process outlined for you. So the key is to, one, understand what is the process. And so once you have that information, it really does boil down to, do they have the facts about your property correct? And after you know that that's correct, what do you think the property is worth? The real challenge may be in how do you determine for yourself what you really do think your property is worth. And we talked about the idea that you could hire an appraiser, but doing it yourself, why hire an appraiser? You're going to save the money, but how can you do it? One of the things you can do, Tom, is that you can approach a friendly neighborhood realtor. Very helpful, very willing to talk property value with everyone, because that's what they do.
They might get your listing someday.
Exactly. And so communicating to someone like that, typically there's no cost, and you can at least get a perspective. You could get 2 or 3 perspectives from similar people. The other things you can do is go to certain websites that are now providing across the country what's called a property valuation that's based on what's called an automated value methodology. Something like a Zillow.com, for example, ZILLOW.com. They've gone around, inventoried the entire country, and they have an opinion of value. Now, you have to be careful to some degree, because a lot of these AVMs, they call them, are based on the assessment records, and then they overlay some facts from the market, like a closing that may have occurred in the marketplace. But if you want to be careful, because if it's based on the assessments, here we are talking about whether the assessments are valid.
But I think what I'm hearing from you, Wayne, is if you talk to your local realtors, if they'll chat with you a little bit, if you call an appraiser in town to see if they'll talk with you complimentary on the phone for a couple of minutes, you go to Zillow, you formulate 2 or 3, 4 different values, right. You may be able to reconciliate all those values and find out if you're in the ballpark?
You do, and then the other thing, the secret to the formula, is the special sauce that says, go to the assessment records and not only look at yours, but look at all the other properties in your neighborhood. And that's the #1 telltale item. If you don't have the nicest house in the neighborhood, but yet the assessor put the highest value on your house than anyone else in your neighborhood,
ding, 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 ding,
you've
ding,
got
ding.
your red flag. That's
okay,
right.
So you look at all this and you say, well, my house is overappraised. How can you estimate what your savings might be?
Well, it's all based on the percentage of the reduction. If the house is, say, $200,000 going in, you're making an argument that it's only $150,000. Well, that's a
$50,000 there.
Well, that's where it's confused. It's the percentage.
Okay.
You don't want to think 50,000, because now I'm thinking I'm saving 50,000.
Right.
You're reducing the value by 50,000. That's a 25% savings.
Okay.
So what was your tax bill last year? And subtract 25%.
Got it.
That'll give you a sense. Now, tax bills tend to go up a little bit, so you can get a little more detailed. But the quick and dirty, how much do I think it's off percentage-wise? And then apply that to your last tax bill.
See, Wayne, this shows where I got a C in math and you got an A.
Well, and you still use a calculator, don't you, Tom?
I do. I have it in my left-hand pocket. How about my valuation? If I go in and they look at the house, could they increase my value because they think my data is wrong?
Well, the assessors on a regular basis, say every 5-10 years, will do what's called a physical revaluation. That is when they have a team of people from a revaluation company that are actually walking your streets, and they knock on the doors of the homes, and while they're knocking, they're taking a look at the outside, and if you open the door, they ask to come in, and if you let them in, they're going to document what they see your house is. More often than not, there's nobody home during the day, and they didn't actually get inside your home. And so if you want to validate that they have the proper information, and if right now you're seeing they say you have 4 bedrooms but you only have 3, then it obviously helps you to have them come in and confirm for themselves that you only have this number of bathrooms. But you can also accommodate that, though, by taking pictures, giving them other information, and avoid that whole need to have them come to your house.
And what's the law? Because people say, do I have to let them in?
You don't have to let anyone in your home.
Good.
But check with your lawyer.
Is there a cost benefit to doing this myself versus hiring the process out to the attorney, the appraiser, or other tax appeal people like yourself?
I think that in general, my experience has been that your assessment typically is fine, fair, compared to others, or it might be off by 5, 10, 15%. The average tax bill may be being somewhere between $2,000 and $4,000 for most homes in this area anyway. If you're shaving off only 10, 15%, it's good money to us. It's $400, it's $600, that's good money. But once you start paying out for the assistants, the appraiser, the tax consultant, the lawyer, you can see how that valuation, the cost benefit is not quite as good. Now that said, it's $400, $500, and it may be a savings that you will get, though, for the number of years that they're going to use that valuation. And so that one-time change could be worth the reduction for 5 years. So that's how you kind of analyze whether or not you think it's worth it. Am I going to benefit from the reduction for 1 year? Am I going to benefit for it for 4 years?
Stop banging the table, Wayne. On that note, we're going to take a short break. We'll be right back. You remember me of Mayor Bergen. Whenever I'd have him on the radio, he'd be bam, bam, bam.